Great. Awesome. Well, thanks once again, everybody, for joining. Very excited for the discussion today. Another phenomenal panel for webinar 12 of 12, our final webinar in the series of Building Enterprise Level System with Xero, presented by CFO Tech Stack. My name's Jack Teal. I am the APAC commercial lead at Mayday. We're on a mission to mend month end for larger Xero businesses, beginning with the needs of those who are multi-entity, intercompany recharges, cross-entity bank reconciliations, keeping your intercompany loans in balance, all things that we're solving today for larger Xero businesses. As a little bit of background on me personally, I started my career as an accountant with PwC about 10 years ago, where I completed my chartered, did all the things that you're expected to do there, including forecasting, including auditing, all those bits and bobs. I then went and worked as an advisor to SMBs at a small local practice, which was obviously a Xero using firm, and I've spent the last 5 years working in a variety of different startup roles across the Xero accounting tech ecosystem. I'm as passionate and bullish as ever on Xero. I think it's an amazing platform with so much potential that's still untapped. The amount of conversations we've had over the last 12 business days, hearing about all the different large businesses that don't have one add-on to Xero implemented in their tech stack is quite astounding. And it says that there's still so much more capacity and opportunity here for larger Xero businesses. But I think what is lacking is the amount of content for this audience. So I'm really thrilled to be here representing CFO Tech Stack with some extremely experienced individuals in James, Michelle, and Michael. So I might pause here and allow them to introduce themselves. So James, if I can hand over to you first to give your a quick intro, that'd be fantastic.
Thanks, Jack. Yeah, just really quickly, I've been in the accounting practice scene for about 27 years now. So I spent probably 10 of those years out in private business. So I've owned private businesses myself, and I've also been on the board of businesses that right up to ASIC listing. So list businesses on the ASX. Currently, I work in a accounting firm, predominantly with small to medium businesses, but my focus is on forecasting. So over the last probably 12 years, I've done a real lot of work with Michael and Castaway in that space. So that's pretty much what I do for most of my day now.
Awesome. Thanks, James. Michelle.
Hi, everybody. I'm Michelle Kvello. I am the founder of Lantern Partners. Lantern Partners is a CFO advisory business, and we work with founder CEOs of startups and scale-ups, and we work with them on a fractional basis to provide them with the commercial and strategic finance support. And quite often that includes helping them with the forecasting, helping with them with a number of different issues that they have as they scale. And yeah, helping them see the way forward with a bit of clarity.
Cool. Great to have you back for session number 2, Michelle. And finally, Michael.
Jack, how are you going? Michael Ford, founder and CEO of Castaway. I'm also the head of the product team over here. Like Jack, in fact, like all of us, chartered accounting background, lots of years, 12, 13 years at KPMG, then PwC, doing SME advice, doing international trade, doing all sorts of applied commercial thinking. Jumped out in 1999 and started my own business around GST, and then quickly got into forecasting as a tool for growth. I fell in love with the idea of forecasting, accidentally fell into owning a software company that happens to do forecasting, and now that's been my passion for the last 15 years, working with SMEs from pre-revenue startups up to multi-$100 million organizations, forecasting with Castaway and Excel and other tools as well.
Amazing. Thanks, Michael. Thanks for joining us. And thank you all. Obviously, a very well-suited panel for the discussion today. In terms of what we're going to be covering, just to set the scene a little bit more, because as I mentioned earlier, at Mayday, we're currently built for larger Xero businesses, and chatting with those businesses and the CFOs and the finance teams of those, we get a couple of key questions quite often. One is Xero still the right accounting platform for me? And 2, how long is that going to be the case? These are the questions we want to help answer with this series. I think there's been some fantastic conversations so far, and hopefully we can wrap it up with another good one today. We all know that the move to ERP is quote unquote horrible and hectic, as one of our clients described. It's incredibly expensive, and that's before 58% of ERP implementations fail. So we want to, I suppose that's why we've coined the term ER peace of mind. The peace of mind of knowing that you can scale with Xero into your growth phase without needing to make that move to an ERP. The series is designed to be helpful to our target customer. This isn't Mayday content. This isn't a product marketing webinar for Mayday or Castaway. There's a reason we're not wearing branded t-shirts. We're not going to be doing demos. It's about having a conversation about righting the misconception that you can't scale with Xero into your growth phase. But equally, we don't want to overcorrect, and we don't want to replace one myth with another and act as though Xero is this all singing, all dancing panacea of accounting software. We appreciate that at some point you may outgrow it and you may need an ERP, and we want to have a good, honest, open conversation about that and about the strengths and limitations of Xero. So thank you once again for jumping in and jumping on this session and any others that you've joined us on. As a very quick overview before I jump in and ask questions, this is the agenda today. First and foremost, we're going to delve into what Xero does well with regards to this area. Then we're going to go down to the growing pains, the trigger points, the complexities and challenges that you might begin to face if you are just using Xero. Then we'll begin to explore the ecosystem. What can you achieve by bolting on an add-on to Xero to enhance your forecasting and modeling? And then, of course, we'll discuss when might an ERP be the only solution. Is there a reason within the confines of forecasting and modeling that you would benefit from moving to an ERP? And after that, we'll finish off with some takeaways and top tips, some pieces of advice to leave you with, and answer any questions that are still open in the Q&A. So please make use of that Q&A section. So that's enough background, enough context. I want to jump into the conversation now. And Michelle, I might begin with you if that's okay. Can you set the scene a little bit around, what does a business or a finance team need to be thinking about with respect to forecasting and modeling specifically as they begin to plan for growth or begin to scale up, run into some complexities? And then what does Xero do well for them? And where might they begin to run into some limitations with just Xero?
Sure. Look, with the businesses that we're working with, I guess there are two main reasons why they start getting really focused on forecasting solution, how to forecast well. The first one is around raising funds, whether that is borrowing money or whether that is potentially preparing themselves for investment or eventual sale of the company. They're going to need a robust forecast in place, and they're going to need a forecast which ideally is what we call a three-way forecast, which incorporates all of the three financial statements, so your cash flow, your balance sheet, and your P&L. But also, really importantly, the businesses that we're working with, and I think the businesses that all of us on this call have worked with, is you need to have some sort of roadmap as to what is going to happen in the future when you're making your decision, some sort of tool to say, hey, should I be choosing option A, option B, option C? And most importantly, what do I do if I choose option A and option A doesn't turn out the way I was expecting, as most things don't quite turn out the way you're expecting. And so it gives you the tools and the visibility to course correct as you're going through that. And that's really important for a scaling business, to be able to have that forward-looking lens and to be able to react and make decisions quickly. So that's why we focus on the forecasting elements of things. And Xero isn't intended to be a forecasting system. It has a little bit of functionality in there in relation to forecasting some of the cash inflows and outflows into the business. But if you want to go beyond that, you're really talking at a first level, exporting results and playing with it in Excel if that's what you're comfortable with. But unless you have a very sophisticated kind of data modeler within your team, the most efficient and effective way to do that is to actually start looking at other systems and tools to leverage off of the information within Xero.
I think that point about having a sophisticated data modeler or Excel guru in your team is an underrated part of this conversation, because it seems to be one of the biggest challenges that comes up every time I talk about forecasting with people is, oh, we're doing it in Excel today, and I'm scared if we lose this person, or if we just want to delegate this to someone who is more junior in the team, it's hard to do when you've got a complicated spreadsheet full of a maze of formulas. But James, I might throw to you next just to see if there's anything you can expand on there with respect to the clients you've worked with respect to forecasting? What were they trying to achieve that they couldn't achieve with just Xero as a platform?
Well, I agree with everything Michelle said at the outset. So again, I don't think Xero was ever intended to provide this service. And as you know, I think they adopted that approach early on, that any specialised sort of processes you need would be dealt with in the ecosystem. As far as the clients that we work with, I think my understanding is that cash flow shortages tend to be the leading cause of business failure in early life cycle. I think there's a service gap, particularly in the SME space that we work in, where people have been given numbers by their accountant that deal with their income tax, for example, but they don't look at those cash numbers. And there's a really big void for that. So what Xero does really well for us to help clients on a regular basis with that, we need timely information. So Xero's been fantastic going into the cloud. If you compare it to when I first started, people used to bring in, actually way back in the day, floppy disks, if anyone knows what they are anymore. So to go online and be able to collaborate in real time has been a godsend, because we couldn't do the work we do unless we had that timely information. So Xero is wonderful for that. But I think, again, agreeing with Michelle, if you want to look at that forward planning and answer all those questions that people need to ask about their business, you really do need a different product. I've never really relied on Excel for my clients because it can be too, data integrity really worries me with a lot of those models. So again, I'll just speak to Michael's product for a bit. We do use Castaway pretty extensively within our firm. The main reason is because it allows you to model in a lot of detail. So one of the things that I think is really important about modelling, it's no use, the old garbage in, garbage out principle. So some of the products aren't detailed enough to produce an accurate forecast, which is where a product like Castaway comes in. So it's wonderful for answering lots of different questions for clients around the management of their business, as opposed to just telling them how much tax they need to pay. So I, again, agree with Michelle on that point. The forward-looking thing is astronomically important. I think, relying on your accountant's numbers that are 9 months old to tell you how you're going is just, it's completely flawed. So that ability to look forward, I talk about, imagine driving your car with the windscreen blacked out and using your rear vision mirror, you're going to hit a tree at some point. So that's where that forecasting comes in. So what Xero does extremely well is gives us the ability to collaborate with our clients in almost real time, get timely information, but I would certainly then move on for that. It doesn't really help us with the forecasting and a specialised product in the ecosystem. There's plenty of them out there. They work wonderfully.
It's a great analogy. The car, the windscreen. I like that. Michael, I might get your thoughts now. You've heard what Michelle and James have said. You obviously deal with forecasting every day. You talk to a lot of your customers, clients who use your product. Are there any other pain points, number one, or trigger points that kind of lead them to come to you and say, hey, we need a solution to this? Or, I mean, is there part of this that people don't know what they don't know, and they need to have someone come to them to say, hey, why are you not spending more time looking forward? How do you see that challenge? And
I think you're right on all counts there. Often people think of the tools in the ecosystem, the forecasting tools that are out there, as being cash flow improvement tools, cash flow forecasting tools. If you think of them like that, then all they're good for is solving cash flow problems. But the good tools out there are there for help solving business problems, which could be growth problems, it could be margin problems, it could be cash flow problems, it could be uncertainty problems, it could be 1,000 different problems. What gathers them all together is they're the things that keep people awake at night, that keep the business owners, the business leaders awake at night. And I've never met a business owner who doesn't want to improve their business. I've met accountants who've said, oh, my clients don't need that sort of thing. And I reckon there is a disconnect there. But I think every business owner has some aspiration to improve, whether it's improving profit, cash flow, or even just having more days off. There are different definitions of success. To Michelle's point about creating roadmaps, I think that's what this stuff's all about. Forecasting, and what we're talking about today, is not about putting numbers on a page. It's about creating stories of the business written in numbers. There's a real discipline there. The forecast that pops out is just the result of, it's kind of a story of one possible solution to one possible set of circumstances, but the value is in the forecasting process that you go through. And from that perspective, it kind of doesn't matter which tool you use, Excel or a back of an envelope or anything else. It's that discipline of building forecasting as a muscle inside the business. the tools that are out there, and there's plenty of them, as James said, in the marketplace, are all great at doing this stuff. They take a ton of time away from the number crunching, which then frees you up to do the smart stuff that we as advisors, whether we're internal or external advisors, where we generate a unique value. So I'd always urge using some kind of tool. I'd always urge, as Michelle said, always urge forecasting. Otherwise, you're flying blind, and as uncertainty increases, that's a crazy thing to do in a business. No one wants to do that. But I think there's a lot of people who don't understand. Like, they think a forecast is a thing you do in Excel, just with income and costs, and you put it in the top drawer after you've sent it off to the bank once a year. There's so much more to this thing, and I think it's up to us as advisors to educate around that as much as we possibly can.
Yeah, and you touched on the, I suppose, different kinds of products that might be out there in the market, some a little bit more focused on cash flow. I mean, while we're on the topic, we can kind of move down to point 3 on the agenda there around the ecosystem. And maybe I'll just go back to you to continue the conversation, Michael, and then hear from James and Michelle around. So you've obviously got differentiation within forecasting as a category. What is modeling? How does that fit in from a definition perspective? Is that one and the same? What should people be considering if they're going to the Xero ecosystem? Maybe they're having a look on the App Store, or they're going to an advisor to say, hey, we need some help with this. What are the key elements that people should be aware of when they start to look at products or add-ons to solve these problems?
I think there's a lot of confusion around this, and you only need to see when people post up on LinkedIn a question like, oh, what's the best forecasting tool, without more context. And there's a big pile-on of all the add-ons and vendors going, oh, it's me, it's me, it's me. There are 3 distinct parts of this market. I think there are the short-term cash flow tools, daily, weekly, invoice-based, supplier-based, paying on the 17th, forecasting survival cash flow. And there's some really good ones out there, Float being one of them. Fluidly was another one over in the UK. And Xero's cash flow forecasting kind of comes towards this piece. It's really about cash survival. The second group, second and third groups, are all the 3-way forecasting tools. And as Michelle has suggested, you've got to be doing 3-way forecasting, otherwise you risk grossly missing something. And so there are the tools that are designed for quick, easy building of forecasts, lots of automated stuff and fantastic looking reports. And they are great to get a starting point, I think. And then there are modeling tools, and modeling is different to forecasting. There's no strict definition. I reckon budgeting is what you do once a year, pretty static, and you put numbers, together at the start of the financial year and you don't change them. Forecasting then leans into the idea of rolling forecasting, continually updating or revising the forecast, your forward view as circumstances change. You're on the precipice of learning something when you're taking a forecasting approach. Modeling is something different again. And typically it's been the domain of Excel and the higher end tools, where you can create connections between sales and, say, cost of sales and inventory and creditors and debtors and GST and cash flow and interest and dividend structures, where you've got dynamics built into the model. So, COGS is 35% of revenue. And then there's a whole series of other rules around there, so that when you build a dynamic model, you've got something you can then use for stress testing, for what ifs and simple what ifs, and then also for more detailed scenario testing. The great risk is if you don't have lines connected to each other and you start winding sales up by 10% and other things don't actually move at the same time, you can create a great a misconception that you're doing much better than you think. Modeling is really where it's at, I think. It takes a little bit to transform a forecast into a model. Modeling is really what the game should be about, because it helps people answer those questions of what if. That's where we engage our clients.
I think that's really valuable, Michael. Thanks for breaking that down. Very, very helpful to kind of understand where the segregation is, or the differentiation is in those areas. Michelle, I mean, speaking to your experience, it'd be great to hear what you've seen, within your client base. What have they achieved by adding something in from the ecosystem, whether it's Castaway or something else? What is the outcome at the other end? You put together a great model for them, or a great forecast for them. What does that lead to, or what has that led to in your experience?
Yeah, I think one of the really important points to clarify is that, one, it's not about the actual platform that you're using. There are a lot of great platforms out there, and they do, as Michael said, they do different things. And so you need to be clear about what you want from this platform. But once you've chosen the platform or the tool to do these forecasts, it's really about the quality of the conversations and the inputs, what we call assumptions going into these forecasts, that you really need to spend the time crafting, because that is what's going to tell the story, or one of the stories of your business, and what your financials are going to look like, whether that's from a P&L perspective or a cash flow perspective. But once you do decide to kind of invest in this process, both from a tools perspective and a resource perspective, is that what it's going to create within the business is it starts creating not certainty, and I think that's really important, not certainty, but clarity. It gives you a view of your options, because your forecast, however detailed it is only going to give you a particular outcome based on that set of assumptions. As we all painfully know, particularly over the last few years, there are things that you believe about the business and how things are going to turn out that you can control, but there are also things that you can't control. And so when some of those things that you can't control happen, or when you make a change to the direction of the business or a particular product suite or a particular service suite, how do you tweak those assumptions within your forecast and see the new outcome that that's going to give you? And so that's really where, when we're working with clients and really go that next level down with the forecast, that's where they see the value.
Yeah, I think that point of not certainty but clarity is really, that really hits the nail on the head, because you hear sometimes people say that, well, it's going to be out of date, in a week anyway, but that's, missing the point in some way. Yeah. It's about understanding that that's going to happen, and being able to tweak and move and keep it fluid as things change. So yeah, thanks, Michelle. That's super helpful. James, I mean, from your side, you obviously use Castaway, and we want to be clear that there's a whole ecosystem of products. We're mentioning that there are other solutions out there. Do you see it as an app you use for all of your clients when it comes to this, or are there situations on either end of the spectrum that might be a little bit of an edge case that might be a bit different? Just in case our audience is listening thinking, is this definitely for me? Are there elements that you'd say, yep, for 95% of these situations it's going to be right? Or how do you assess the different products for different situations?
Yep, really interesting point. And Michael attests to the robust conversations we've had over the years. So we always put Michael on notice that we're always in the dating market for other apps. So we keep him on his toes in that sense. One of the reasons that we've stuck with Castaway over the years, particularly when the market, there weren't a lot of products in the market like this when we first started. But the most important thing, and to talk to some of Michelle's points, to put the model in place, you do use assumptions in your forecasts, and this is Michael's software copes with modeling those assumptions probably holistically better than any other product we've seen. So I imagine it's a bit like a low resolution picture versus a high definition picture. And the problem is, if you take too many liberties with your assumptions, the output there's too much leeway. So we've always been in the market looking for other products, but the most important thing for our clients is to be able to give them something that is actually useful. And for that, the ability to model those assumptions as accurately as possible is really important. So, we found instances where, you're trying to model if you've got high levels of payroll and it just doesn't cope with payroll modeling, some of the products, for example. So, you can build the great model. Some of the products look fantastic from a visual point of view, but again, if you put that limited information out, that it's not particularly useful at the other end in our experience. So again, I don't stick with Michael because I love him, but his product is very good in terms of the ability to model those things.
This comes up a lot. I think this debate of simple and easy and maybe beautiful to look at versus deep and potentially more complex but more accurate.
Yep.
It's one of the conversations we had in one of our other sessions. Somebody mentioned something quite interesting, which is if other stakeholders can't engage with the what's produced, then it doesn't matter. It doesn't matter if it's accurate to the dollar and cent for the next 10 years. If I can't show this to other stakeholders who might not be as financially minded as me as the in-house accountant or CFO, then I can't bring them along this journey that I'm trying to go on. So how do you deal with that? I mean, how do you deal with that balance of saying, look, these look pretty, but
Yep,
You know,
that's an excellent question, Jack. Just to give you a bit of background on where we come into the picture with a lot of our clients, with a lot of the SMEs we deal with, and even some of the larger multi-generational businesses that are being started, people come in often from, for example, a technical background. So they're focused on producing product or working in their business, and they learn about the financial aspect of things often as a byproduct of just being in business. So something that our firm does really well, I think, is engage on a really educational level. I think the first thing I say to people is it's really important that you understand what information I'm giving you and how to use it. Otherwise, they won't place value on our ongoing long-term relationship. So when they reach the justification stage of their relationship with us, because our fees are generally higher than someone who doesn't have that contact with their advisor, they're going to ask, what am I getting out of it? So we'll focus on pain points for the client and how we resolve them and provide an education around that, and then teach them how to read the numbers. So one of the reports that I use out of Castaway, for example, it links the cash flow right back to the EBIT, because clients, for example, they're used to seeing EBIT. So most of the people I deal with have a rough idea what that is. But then they see all the information that they're not getting from their traditional reporting model and all linked into one report. So it's not a pretty report. It's not designed, to be visually appealing. However, with a little bit of education, the clients can really see some immense value in that. And again, Michelle mentioned before, getting finance and understanding all these things. I've dealt with a number of clients who can't get finance because their profit and loss statement looks great, but the cash flow is horrible. So educating them on where that money is going and why they're not appealing, for example, to a financier, pretty quickly, once people understand how we can resolve their pain points, they do become interested in what we're talking about.
Yeah, great. That's awesome, James. Thank you for that. And I think that probably brings us to the end of point 3 of the agenda. We do have a question in the Q&A here, which I want to provide a little bit of perspective on from my side, being in tech, and when it comes to pricing, it is always complicated. But then I'd be keen to get your thoughts, Michael, on justification behind price. So the question is, at a minimum cost of $150 a month, which I'm going to trust is correct, which is more than Xero. How can I justify buying an add-on to Xero that's going to cost more than Xero? And I think this is a really interesting it's challenge as anyone who works in business to get your pricing right and to have that come across the right way. I've always thought that, Microsoft charges $15 per user per month or whatever it is. So if you compare every other software purchase to them, everything in the world is going to be so expensive because they provide almost everything you could ever need to run a business for $15 a month. Yet we spend $70 or more to get Xero. So why is that? Well, because it's better than any accounting I'm going to be able to pull out of a Microsoft system. Why do I then pay X and Y for these other add-ons? So I think there is a challenge to compare one app to another, where the unit economics of Xero, which is a $1 billion company with hundreds of thousands or millions of users, they can bring their prices down because they're targeting a very specific market and scaling to a certain perspective, versus a product that's designed for a niche or a relative niche in comparison. Very specific use case, very specific value proposition. No one else is doing it, so therefore can charge a different amount. So I think my feedback would be, don't compare an add-on cost to Xero, because it will never make sense there. But compare it to the cost of doing this yourself. Compare this to the potential value you'll receive out the other end. But that's enough from me on this. I think pricing is so interesting. But Michael, I'd love to get your thoughts. Why is Castaway more expensive than a Xero subscription?
Let me come back. I'll answer that. You talk about Excel being $15 a person per month, but you've then got to go do all the work. And so what you might take 8 hours to do in Excel, and you can do all the forecasting work you want in Excel, will take you 8 minutes in Castaway. Updating a set of reports at the end of a month takes 1 minute. In Excel, it can take hours to roll things forward and whatever. Value equals benefits minus price. And so I guess what the question is, what are the benefits you get from it? To come to the actual person's question, and it's a really good one, what other apps are out there? There is a whole host of them, and it's an exciting time in app world. So you've got Reach and you've got Sift, which are really strong at reporting, and they're getting into more analysis and more deep dive forecasting. Futurely, Spotlight, Calxa have been around for years. great tools around forecasting, different strengths, different weaknesses, but they're all in that kind of mid space that where if you've got the problem they solve, they're fantastic. Fathom as well as a great combination of beautiful reporting, deep analytics, and some really nice forecasting tools as well. There's a bunch of others. Atani, there's others that are kind of more Excel driven and more that they require a bit more hands-on work. It actually, it's harder than ever, I think, to make the choice as to which product. Pricing is only one variant. If you look at all the products, they're kind of priced roughly the same. Yes, 150. And 150 for us means you get three files. You can go and build 3 files. Pricing is always a challenge. We work with single partner firms, very small pre-revenue startups. We also work with 8 of the world's 10 largest accounting firms, half of Australia's top 100, and plenty of SMEs that run from a few $100,000 revenue up to hundreds of millions. The challenge is always, how do you price for all of those people? Why is a forecasting tool more valuable or more expensive than Xero? I can't speak to Xero's pricing, but I would have thought the value you get out of any of these forecasting tools, the ability to have a conversation about the future, the ability to drive a roadmap, the ability to satisfy your lenders, to satisfy yourself as to your possibilities and opportunities in future, the ability to face uncertainty is worth more than a couple of cups of coffee a month, I would have thought. We have some people who say, Michael, I would pay you $30,000 for this product. And others go, hey, it's too expensive at even, at $20. I don't think you can satisfy everybody. If you're annoying everybody, I think on average, you're probably getting it about right.
Yeah, no, I love that. Thanks, Michael. And so we've got another question in here. There's another point from the same poster around convincing another stakeholder. I think probably it's veering a little bit far off of the topic of discussion today, so I don't get too caught up in it, but I think it's a great point. There is a discussion there around, for a finance team seeing certain value. And I think it's the comfort around where are we going, the clarity around that. It's some of those intangible elements as well that need to be factored in, that from a CEO's perspective is going to be different to a CFO's perspective. So we won't go any deeper on that. There is a specific question here around what's your recommendation for visualizing budget v forecast v actuals? James, Michelle, would love to, either of you feel that you can jump in here as to, how to do that.
Sure, okay, I can jump in. I think there's a point around what are you trying to achieve from the tool that you're plugging into Xero? Because we use Spotlight with some of our clients as well. They do, they have the data visualization of actuals versus forecast, and a lot of kind of graphs that you can design. I think the question as to what is the most important aspect for the tool that you're selecting, because you are, if it's out there, I haven't found that one tool that does everything excellently. So you're going to have to choose what is more important to you, to your client at that particular point. Is it getting real granularity into your forecasting, or is it visually displaying that those results and the activity against forecast to your board, your investors, to your employees internally, operationally? And you may need 2 different systems to do that. You may need one forecasting system to actually build in all of the detailed business drivers, collect a forecast, pull together a forecast for you that does a 3-way forecast in a really, really robust way. That's not always going to give you the best data visualization, actuals versus forecast. So there's a number of tools that can do those 2 different things. And there are some tools that do both, but they won't do both things really, really well. So, the conversation we are always having with clients when we're choosing technology is, what is the most important thing that you want to achieve with this particular tool or platform? Let's start there. And then almost after you've selected your tool, it's kind of flipping the conversation. So now we've selected the tool, how do we adapt our processes to actually use this tool in the most effective way? And what other tools might we need to complement that? There's never one binary answer, unfortunately.
No, great advice, Michelle. I am aware of time. We've got just over 9 minutes before we need to wrap up, and there's still a juicy item on the agenda here. So I think we'll move on to that. Feel free to chuck any questions in, and we'll address them as part of the Q&A at the end. So we've discussed, what Xero does well, which I appreciate is a bit limited with respect to forecasting, which is fine. Some of the growing pains, or what you might be trying to achieve, or what desired outcome would be to move to a forecasting or modeling add-on, how you can, look to the Xero ecosystem there, the various options, the differences or differentiators within that category as well. But at some point, the conversation then goes to, but I'm, reaching this stage. Do I need to move off of Xero altogether? Should I leave behind the ecosystem? Do I not need to worry about an add-on anymore? I can bring it all into one super app. Michelle, to kind of your point, can you do that? Is there such a thing? So, I mean, maybe here, Mike, I'd love to get your thoughts. I know you've spent a long time in this space. So what's your perspective on this? Do you see ERPs providing a good solution to forecasting and modeling? I guess keeping this discussion of Xero ERP within the confines of today's topic.
The very quick answer is no. All of the people we speak to, whether they use Castaway or anything else, it kind of doesn't matter, come to us because they're saying their ERP is not robust enough around its forecasting capability. Forecasting is kind of a bolt-on to the ERP. So we've got people using SAP, Microsoft Dynamics, all sorts of ERPs, as well as Xero and the like. Very few of them, very few of them rate the forecasting tools inside ERP. So forecasting, or the lack of forecasting, or the limited forecasting capability in Xero is not, for me, a reason to go to an ERP. Last night I was talking to an organization in the US. They do $28 million of revenue on Xero. Work with a $20 million charity that is all on Xero. We've got a couple of organizations over $100 million turnover who work on Xero. I think because Xero is a fantastic transactional platform, easy enough to work with, and beautiful outcomes. Adding these bolt-ons mean that you don't have to make that jump. A friend of mine just spent $80,000 to get his Microsoft Dynamics implementation upgraded. That's just, and it's a pretty simple $5 million manufacturing business. It's astronomical compared to the cost of Xero or the cost of Castaway. Yeah. Even at that point, I've just put that put in. The cost comparison is and complexity comparison is just out of this world.
Yeah, I mean, we hear it time and time again. We want to make sure that we're having an open conversation about this, which is to say that there is a point in time where, they're massive businesses. BHP aren't going to be on Xero. So there's a line somewhere, right, where you swap. And it does seem to be more and more as time goes on, the only reason, or there's very few reasons. One of them is if your Xero starts to slow to a halt because of the volume. Beyond that, it seems like more and more are saying you can actually solve every other problem really with add-ons. James, I'm keen to get your thoughts on this within your client base. Have you had many outgrow Xero? What kind of scale have you seen achieved on Xero? Anyone coming to you saying, is it time for me to go to an ERP?
Yeah, we certainly have over the years, and Michael's aware of a few of the businesses. We had a business that sold recently for just under $100 million that we dealt with, and they were on Xero. I had the company I dealt with that went to ASX listing. They were on Xero through their entire journey. So it can cope, because I think there's two separate issues here. One is typically data volume. So, if you've got hundreds of thousands of employees, clearly the payroll module in Xero is not going to help you for very long. So I think the other data volume is not necessarily alongside complexity. So you've got really small, simple businesses on Xero. You've got complex businesses that might need some help with an ERP that don't have large volume, and the other one's large volumes of data. So I think you've got the mix. Typically, given today's topic, though, I haven't really personally seen any software like ERPs or Xero or any products like that are very good at forecasting. So my view would be, regardless of the size of the core accounting package that you use or the ERP, that, in my opinion, with the work we've done with a broad range of clients from very small to reasonably large, is that we'd always use a specialised forecasting product because, again, the issues that I've spoken about earlier.
Yeah, that's really interesting. Thanks, James. Michelle, anything else to add from your end before we wrap up the conversation?
Yeah, no, just to echo James's point, I think you wouldn't be looking to move to an ERP to satisfy your forecasting needs. It would be more the complexity of your GL, whether that was volume of transactions, complexity of business, or having a multi-entity, particularly kind of global multi-entity organization, all within the same GL framework. That's really kind of the main things that tip you over into an ERP. I think I mentioned on the previous webinar, for us, we generally haven't had our clients move over to an ERP because of the cost benefit analysis and payback period they're looking at. If they're a business that is potentially looking to sell, and have got a window which may only be kind of 2 or 3 years, you probably aren't going to get the value from that transition over that short period of time. You really need to be looking at a much longer term time frame to make that ERP transition make sense.
Yeah, I thought that was really a brilliant point that you brought up before anyone else had around that discussion. So yeah, I think that's a nice way to kind of end point 4 on the agenda. So I might, once again, anyone who's tuned in, please feel free to use the Q&A if you've got any questions from anything that we've discussed or anything else, even specifics about Castaway, feel free. But yeah, given we're wrapping up, I might just ask each of you for, one top tip, piece of advice, key takeaway when it comes to, preparing powerful forecasts and models that you can leave with people to think about as they go on from today. So, Michael, if I can go to you first.
All the good ones have been taken, and it's been a great conversation from my point of view. Modelling. Be a modeler. Don't just put numbers on a page. Is what I would suggest. Let me add one point, and it picks up on something we said before. Forecasting is never about trying to predict a certain future. It's all about trying to prepare for multiple uncertain futures. When you understand that, modelling it makes a lot more sense, and then the process becomes exceptionally valuable for your organisation.
That's great. Thanks, Michael. I think that's perfect. Michelle?
Without trying to steal any of Michael's, because they were all excellent tips. Spend the time on really thinking about how your business operates and putting that thinking into your forecasting. That's where you want to spend your time.
Great, thank you. James?
Yeah, Jack, I think approaching this, think about what you're really trying to achieve. So again, I think forecasting is invaluable. I think all businesses should use it because, as I said before, there's such a service gap, I think, between traditional bookkeepers that businesses have or in-house people who do raw data work and accountants at the high end who provide advisory. There's just so much information in that space that you can generate. So I'd pick a really flexible product that can grow with your business and that will give you the level of detail that you need to make a useful forecast in that space. My top tip is, if you're in any sort of business, is to learn about this stuff, regardless of what level you're at, because too many people just don't understand the interaction between cash flow and accounting profit, and it can be a disaster waiting to happen. So my top tip would be, get educated in this space, regardless of what sort of business you're in, and have a look at a product that's suitable for your needs.
Yeah, I think that interaction between the different elements, the 3-way modeling versus just your simple cash flow forecasting as well, that differentiation is important to understand, because if you are going out there to build something and you want to know that this is going to be robust, I'm not going to miss any key element, to have something that does the 3-way is really critical. So thank you all for coming. Thanks for your time. I really appreciate James, Michelle, and Michael. Very quickly before we wrap up, just a quick mention to anybody who's here who is Sydney based. We've actually got a wrap event tomorrow. The series has been awesome. It's finishing right now. So we want to give anyone an opportunity to come by, drop in, have a drink and a chat. We've got Michael will be there. We've got a few other of the panelists joining us, some representatives from Xero there as well. So it'll be at Xero Sydney HQ. I wish we could do it everywhere. The reality is we can't. We just gotta pick one. So Sydney is the location. So if you're not in Sydney, apologies, but if you are, we'd love to see you there. Scan that barcode, register, get a free ticket, and come along. It'd be great to see you and wrap the series up. Beyond that, there are no other sessions. So thank you for your time. Thank you for coming along. If you want to catch up on any recording, you can do that at this website, apacenterprise.cfotechstack.com. And of course, if you haven't yet subscribed to CFO Tech Stack, please do. It's a fantastic weekly newsletter that goes out with finance leaders sharing their tech stacks, upcoming events. It's a fantastic resource for larger Xero businesses and organizations. So definitely check out cfotechstack.com too. So appreciate all of the thank yous and stuff. It's been a great series. We hope to be back doing more of this kind of content, helping finance leaders in larger businesses to get more from Xero, because I think it is an underutilized, underrepresented space. So James, Michelle, Michael, thank you all once again for your massive contributions today. Super awesome conversation, really interesting. And yeah, thanks to everybody who's tuned in throughout the series. Thank you very much. Cheers.
Thanks all.
Bye.
No
Thanks
worries.
all. Bye.
See ya.